Thanks for clicking. Canada's real estate prices are going to end the year at 8.5% higher than they were in 2022. This according to a new report coming from Royal LePage. Further, the report also argues that Canada's real estate market has regained almost all of the price losses that it saw during the real estate correction of 2022.
They'll buy anything.
The report comes as the Bank of Canada has just raised interest rates, with prime now sitting at 7.2%, and stands in the face of many observers who think that the rise in the cost of borrowing will put downward pressure on real estate prices.
It cannot happen, would not happen. Momo, what's the matter?
And yet, despite the increase in the cost of borrowing and the seemingly obvious and historical connection between the price of a house and a borrower's ability to purchase one, the report says that the aggregate price in Canada will rise to $821,450 by the end of December. And the report is being treated by the media with the skepticism and journalistic integrity that we've come to expect, with CTV accepting the forecast and advising that the government support the construction of new homes, Bloomberg simply noting the expected price increases, the Globe and Mail noting that prices are down 0.7% from this point in time last year, and Wealth Professional simply noting that buyers remain determined. Yet a closer look at the data reveals that there is a real disconnect between what is being reported and what the data actually says. So what I want to do today is go over Royal LePage's report, taking a look at the disconnect between its assertions and its data, and then discuss some implications for the future. Speaking of the future, Stats Canada is set to release Canada's inflation data for June tomorrow, and that will obviously have a big impact on the Bank of Canada's interest rate policies going forward. We'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this report. Under the report, the Royal LePage report starts with the premise that Canada's real estate market is close to the point where it would have recovered all of the losses during 2022's market correction. World-renowned straight shooter and Royal LePage CEO Phil Soper argues that the market has corrected to such an extent that those who bought at the peak of Canada's real estate boom would break even if they sold today.
I am calling a realtor right now.
And, says the report, it's only going to get better, with the aggregate price set to increase by 8.5% by the end of the fourth quarter of 2023. And the headlines that we saw in the wake of the report appear to support this position as well, with even the Financial Post noting that Canada's average price would be $821,454 by the end of 2023, up from the $757,000 that we had at the end of 2022. So, Royal LePage is saying that prices have recovered following the correction from the pandemic peak, back when the average price was $816,720. And we're likely to see 8.5% price growth by the end of 2023. Yet, as we talked about in a previous video, the Canadian Real Estate Association, the CREA, has noted that June's average price was sitting at $709,000. How is it that the market has recovered with an average price of $709,000 compared to an $816,000 peak, with mortgage rates skyrocketing? How is it that Royal LePage is predicting another $100,000 in price gains?
Just follow the ABCs of salesmanship.
The seeming disconnect comes when we look at how Royal LePage is packaging and presenting the data. Royal LePage is talking about their aggregate national home price, which sounds like average, and it's not. And it's reported, even by the Financial Post, as average, but it's not. As with anything, the devil is in the details and the footnotes. When Royal LePage is talking about its aggregate national home price, it's talking about its weighted average of median values across all housing types.
The Gehakshagogan is framed up by the Ramestan.
Right? Why not just use the average or the benchmark price, which is used by the majority of the real estate boards and is easily understandable by the general public?
Well, you could probably figure that maneuver out for yourself.
Very basically, what Royal LePage is doing when it looks at the weighted average of median values is it's taking a look at all of the sales and finding the median price across all different types of sales. So, single-family detached and condos. And then it takes 4 months worth of that data and it averages out the median price based off a weighted average, meaning if more single-family detached are sold than condos, then it puts more weight towards single-family detached. And it calls this data, averaged out over 4 months, its aggregate national home price.
Feed him and keep him in the dock.
But the problem is that when you collect and present data in this manner, is that it creates distortions. So much so that if we look at the same measurement in 2022, the weighted average of the median values of all housing types was $815,000. Fast forward to 2023, the second quarter of 2023, and the weighted average of the median values is $809,000. Packaged and presented in such a manner, it looks as though Canada's home prices have returned to their pandemic highs.
Not at all what I intended.
But if we look at more immediate data, if we look at data not compiled by Royal LePage's sister company, we can see that we're actually a long way from those pandemic highs. In February of 2022, back when Canada hit its pandemic high, our composite price, our benchmark composite price from the CREA, the price of a home which represents the most popular set of features, was sitting at $845,000. Fast forward to June of this year, just last month, and the composite benchmark was sitting at $761,000. That's a long way from returning to those highs. And if we look at February's average price, February of 2022's average price of $816,720, and we compare it to last month's average price of $709,000, again, we can see that we're well over $100,000 away from returning to those pandemic highs. Those homeowners who bought in February of 2022 and January of 2022 are, despite what Phil Soper says, a long way from being able to sell their homes and recoup all of their values.
I can help.
But I digress. What the report is arguing is that Canada's real estate prices in the fourth quarter of 2023 will be 8.5% higher than they were in the fourth quarter of 2022, noting that a chronic shortage in housing will put upward pressure on prices. And if all of this sounds familiar, it should, as Royal LePage issued a very similar report almost a year ago to the day, when it predicted that prices would rise by 5% by the end of the fourth quarter in 2022, noting that the country's housing shortage would ensure downward movement on prices would be short-lived. For the record, Canada's real estate prices, even using Royal LePage's weighted average of median values methodology, ended the year off at $757,000. 2.8% less than they had the year before, and almost 8% less than that was predicted by Royal LePage. So, in summary, we have a report coming from Royal LePage, which is making its way around the media, making its way around the headlines, which seemingly and reportedly argues that prices are going to continue to rise, and, almost more importantly, argues that those who bought during the end of the pandemic boom have recuperated almost all of their price losses. However, despite the headlines, despite the arguments, the data doesn't exactly match the narrative. If I'm the average home buyer and I see these headlines, I see that home prices are expected to go up by 8.5%. I read that those who bought at the end of February of 2022 have recouped all of their losses even after the real estate market correction. I might have a thought that I have missed out on a resurgent real estate market.
Not at all what I intended.
With that said, how Canada's real estate market will fare for the end of 2023 and well into 2024 will be largely dependent on what the Bank of Canada does going forward, and that will be dependent on Canada's CPI data. We will have an update out on this channel on that data tomorrow. Make sure you click, like, and subscribe if you want to get those updates, but for now, thanks so much for watching.